Hello and welcome. You're watching Money9. I'm Sakshi Batra, and on this show, we discuss everything about markets and fundamentals to help you understand which way are the markets really headed and what's going to be happening to your portfolio in the current volatile environment. Well, I'm going to be joined by a very special guest who will help us do a deep analysis of the market and the current scenario. With me is Mr. Kranti Patini joining in from WealthMills Securities on this edition of Market Meter. Mr. Badini, good afternoon, and thank you so much for taking out time for us. Well, yet another day when we are seeing losses being, incurred on both the benchmarks, the Sensex and the Nifty. Further cuts are being seen, especially in the last 3 or 4 odd sessions. We have seen markets undergo this volatile move and some bit of correction. We are down about 5 odd % from the all-time highs if we talk about the Nifty. I wanted to get a little sense of how are you looking at this scenario. Is this an indication of continuous volatile move until Diwali, or can it go even beyond that? Because we have consistently been on a one-way up, and there has been a constant, anticipation of some kind of correction to coming. So, is this that correction that we've been waiting to see?
Sakshi, we need to look for the level of 17,554 for the Nifty, technically speaking. Of course, in the
Okay.
medium term, markets looks a little bit volatile and weakness is what we are pursuing. And
Mm.
the follow-on buying is not coming. Earlier in the rallies, what we used to witness in the market is the follow-on buying is to come into the market. Currently, that buying interest is not coming into the secondary market. Probably the main reason is the money has been getting allocated towards the primary market. That can be one of the reason. And also the recent reports yesterday, if we observe some kind of the global reports coming from Morgan Stanley, thinking the valuations of Indian economy, Indian markets are looking little bit stretched. So these kind of indications and also the news coming from RBI want to take care about the measures in the short term about the liquidity measures they are going to take. These are the news that are impacting the market in the shorter term. But overall, if you observe the texture of the market and also the result season, there is no disappointments in the result season. And every company we interact, of course, there is kind of some kind of a
Right.
margin pressure that's coming in terms of inflation. But overall, the outlook looks very bright. So investors can definitely use this opportunity to accumulate stocks.
Okay. So also about some specific stocks that have actually become the big headline of the day, after the move, yes, after the kind of news flows yesterday. I want to talk about IRCTC. I remember talking to you about it a while back also when we had suddenly started to see some dips coming in after that rally in IRCTC. And that time also you had told all our viewers that, it is best to stay away at this point in time and not get into the stock, which was a great advice because right now we are actually seeing the stock face about 30% of cut from its all-time highs too. The kind of move that the government has done, how do you analyze that? Will that be absolutely destructive for the stock going forward for those who are holding on to it at from lower levels or higher levels? What should they be doing?
So actually, it is a momentum stock, and also investors need to understand risk associated with these kind of business models. See, yesterday at post market at 349 on BSC, we got the notification stating that the government want their share of pie in their
Yeah.
earnings, and today morning we it got clarified from the Department of Government coming from clarifying that they are withdrawing that same circular. So these kind of moves definitely impact the sentiment of the investors and also the long term. If we observe, uh, who knows? After some time, they may bring back the circular again. So these kind of models, we need to be very cautious. Investors need to take into consideration while investing these kind of risk. But my suggestion to the investors, it's not a stock for the long term moderate risk averse investors. It is for the high risk investors who just want to go with the advantage of the movement and volatility in this stock. And also
Hmm.
one need to aware is the valuations look stretched.
Hmm.
If you drill down the data and read the annual report, I don't know how many investors are reading annual report of IRCTC. If they read IRCTC annual report, they will come to know whether it is the monopoly, oligopoly, Or see, when we say, everyone talk about IRCTC as it is a company of monopoly. See,
Yeah.
monopoly in the sense, how do you define a company as monopoly? Without this company, railways cannot survive. Railways cannot market their product. But uh, without IRCTC also, with the different vendors in the market, with the different platforms in the market, railway can market their tickets. Because IRCTC is promoted by government, again by railways, so they are giving a channel advantage to IRCTC. You can't call that as a monopoly practice. Okay, in a efficient market, in a efficient competition market, everybody have the equal say. Suppose tomorrow, if some the private disruption is happening, the digitalization is happening, if somebody have a very good platform, they can also market IRCTC. You can go to they can also go to their platform and buy a ticket, travel ticket. So these are the risks associated with IRCTC. Investors need to keenly look into all these things before taking any investment decision.
Absolutely, sir. Sir, also wanted to take your view on the earnings season so far. What have you made of the earnings that have come about? We have seen several sectors, most of the stocks in benchmarks, also mid caps as well, in the large caps or the mid caps, all of them reporting their earnings this time around. In most cases, they've also beat the estimates on top line and bottom line as well. Your thoughts on the earnings season so far, and what do you anticipate going forward from here?
Sakshi, earnings season is very encouraging. Okay, we can see the pent up demand that is coming back into the economy, and also pent up demand. What we are witnessing is analyzing the results. It not only in India. If we look at the S&P 500 companies, the pent up demand we can witness in the US markets also, and also the rise in the earnings. So,
Hmm.
what we need to analyze from this data is, for India, the crude plays a vital role. Majority of the it is the inflation factor, and also it plays a major role in terms of the autos, in terms of paints, construction. Many of the logistics are concerned. So, crude is the joker in the pack for Indian economy. We need to keenly observe how crude is going to behave in the next coming 2 quarters. When the world economy is coming back on its track, when the world economy is back on growth trajectory, one of the worrying factor that always surfaces in the economy is the crude. Of course, the Middle East will be rejoicing, but Indians, we need to pay shell out extra money for our travel and transport and everything. We are linked
Yeah.
directly and indirectly to the crude. So crude is going to play a key role. We need to look into the how crude is going to stabilize. That is the main factor. But overall, what it looks is it's very encouraging in the days to come. The company earnings is taken are in an uptrend currently. Just understand, the earnings growth has been stagnated past 6 7 years. Right now we are in the uptrend cycle of the earnings. That's what uh, the market is anticipating, that will lead the market further.
Hmm. Okay, understood that also, sir. So, specifically talking about some of the sectors that you may be bullish on, of course, we are heading towards this festive season. The markets are down about 5 odd percent. So, there is some sort of a sale. And when we look into the below the surface, there is also 15-20% discount. Some of the stocks are available, and also good quality stocks as well. In this kind of a festive mood, people are buying, shopping for several things in stock markets in this current sale of say 15-20 odd percent. What are you really looking at, and what should investors be ready to purchase at this point in time?
Sakshi, you rightly said, whenever a correction comes in the market, it is a shopping season. It starts
Yes.
the shopping season, and the stocks will be uh, available at a discounted price. But most of the investors get risk averse, and they don't participate in these kind of discount sales.
Hmm.
So I would like to encourage investors participate in these kind of discount sales on stock markets when the chips are
Hmm.
available at a discounted price. Uh, so investors can definitely look for the stocks in auto, as well as stocks in capital goods and industrials. And
Okay.
what we witnessed is, just to mention, last 10 years, if you have to analyze the data of ABB, a good company, quality management, very strong earnings, but the stock has delivered in past 2010 years, 2008 to 2009, they've given a compounded return of 4.5% per annum. That just above the saving SB interest rate. But what does it indicate? the industrials and also the capital goods sector under consolidation, and they are in the downtrend of the long term cycle. Right now they are in the uptrend, so there are very good quality companies available in the industrials, capital goods. Investors definitely need to look into the these kind of stocks. If you observe today in the morning also, despite of the fall in the market, the industrial stocks have been rising. For example, just to mention stocks like ESOP, stocks like Siemens India, they are just strongly holding the market. So investors need to look these kind of stocks, and if the market gives an opportunity to accumulate these kind of high quality companies in their portfolio during these corrective season or corrections, when the stock prices comes down, definitely they can invest in these kind of high quality companies. And also sectors like IT and autos gives a wonderful opportunities for the investors.
Okay, absolutely. Well, thank you so much, Mr. Vadini, for speaking to us and sharing these wonderful insights with all our viewers. And season's greetings to you and to your entire team at Wealth Mill Securities as well for the upcoming Diwali festival.
Pleasure, Sakshi, and season greetings to all the team at Money9. God
Thank you
bless you
so
all.
much. Thank you. With that, let's quickly move on to see how the markets are trading at this point in time. Well, the benchmarks have reduced some kind of losses from the early morning sessions. Now they are both down about 0.5% in trade, 59,692 as the level, which is just about 250, 290 odd points of a loss, 17,800 or thereabouts for the Nifty 50 also, with a cut of almost 80 odd points right there. The Nifty Bank is also seeing some reduced losses right there. 0.7% of a cut can be seen. 39,244 as the level, and the broader markets are now trading mixed, with the mid caps now bucking the trend with 0.3% higher, 25,312 as the level of the BSE mid cap index at the current point. For sectors specifically, if you'll see, a whole lot of sectors at this point in time are trading in the green zone now. They have reversed the kind of losses that they were seeing in the first half of trading session. 2% or even 2.5% kind of a gain can be seen on some of the indices. See media stocks, PSU banks, the pharma sector is moving higher. IT is also seeing 0.5% jump, and it's the auto index that is in momentum, 1.2% of an uptick for this one as well. The metals are also shining bright at this point in time. So be it the defensives, the IT, FMCG, pharma space, or industrials, you talk about the autos, or whether you talk about the metals or realty at this point in time, all of them are firing away. But it's some portion of the Nifty Bank, financial services, and private banks that are still creating some amount of pressure, not letting the markets and the benchmark indices really stay afloat at this current juncture. But the signs look like towards the end, we may also end in the green as far as the recovery is seen. But we'll keep you posted with all of that. And for that, you need to subscribe to our channel. But let's quickly also see that the gainers and the losers also at this point in time. For the Nifty 50 gainers, you will have Maruti, Ultratech Cement, Shree Cement, and Tata Steel and Adani Ports as the stocks that are moving higher at in trade at about half time. 1.5 to over 2% of an uptick can actually be seen for these stocks. On the losing side, thereafter, you will see that Kotak Mahindra Bank, IndusInd Bank, HDFC. So the banks, financial services space is really taking a beating right there. Reliance Industries is now creating some pressure on the benchmark index, and NTPC is also down in trade. But overall, the market's still in a volatile zone. As we end this week, we will have to wait to find out what were the closing levels, because this week entirely has been a very choppy week with more losses than gains. So it might be possible that the Nifty and the Sensex may end with about losses in this week as well. We'll keep you posted with all the developments of the markets and what our experts really saying about the developments in the markets, be it the secondary market or the primary market. But for that, you need to subscribe to our channel and stay with us via our social media handles, and also visit our website money9.com. Many thanks for tuning in.